IOC, HPCL, BPCL, all these oil marketing companies climb as crude prices decline 3% overnight on the back of easing supply worries, hopes of a ceasefire in West Asia. These stocks fly away.
Nuclear Software is locked in a 20% upper circuit after the company saying that the board will consider a buyback of its equity shares on the 22nd of August.
All cargo logistics also climbs more than 8% after recording its highest ever monthly volumes for the month of July.
Polycab is up nearly 1% and was off the highs of the day, but brokerage UBS initiated coverage on the stock with a buy rating and a price target of 85.50, calling it a key beneficiary of long-term electrification growth.
ADF Foods too up nearly 3% after 4% equity worth about 100 crore changes hands in a block deal at about 227.5 rupees per share. Good morning, you're watching us here on Chartbusters. I'm Manglam Malu, with me Hormaz Fatakia, and as you can see at the top of our screens, it's a roaring market this morning itself. Opened fairly well thereafter, picked pace and currently at the high point of trade. 24,730 is where we are at the Nifty. The good part is that it's being led by the Nifty Bank. The Nifty Bank was an underperformer in yesterday's trading session, but now as we speak is up almost 1%, nearly 500 points, and is above yesterday's swing high as well, holding above that 50,800 mark. So looking good for the markets.
Looking good indeed, and the Nifty Bank is the one, right? 58.50 is that level which it needs to cross for further upside is what the chartists were suggesting, and it is right at that level for 58.50. The broader markets though are a little subdued this morning, and the Nifty mid-cap index is up 0.3%. The small-cap index is also up a similar quantum. There are specific pockets though that are not doing well. We'll get to them as the show goes by, but there are lots of corporate conversations lined up. So let's bring up our first one, Bikaji Foods International. That's the one on our radar. The company scheduled a board meet on the 23rd of August, that's this Friday, to consider an acquisition. So to discuss this and more and their growth plans, we do have with us Manoj Verma, who's the Chief Operating Officer, joining in now. Thanks a lot, Manoj, for joining in. 23rd is the board meet and it is to consider an acquisition. We're just trying to understand what exactly are you looking to acquire? It's the size, target, geography, if you can give us some sense.
I think let's wait for this meeting to happen and get things through. But no, this is not about geography. This is about getting into categories or expansion into categories. That's what now we're working on.
So what categories are we talking here? And I'm not specifically asking for the name, largely because the board meeting has still not happened. So what we're trying to understand is perhaps the size of the acquisition. Will it be a partial investment? Will it be a full acquisition itself? And is it, what category? Is it similar to yours? Is it ancillary? Is it sweets? Is it liquids? If you could give us some broad sense.
So it's like we already are in it. And in fact, in the past, we've been talking about it to making our footprint stronger in the QSR or frozen stuff. So this would be in like of the same.
Is that a listed company?
No, that will not be a listed company, and we'll be taking high stakes in this stuff. So it will not be a full acquisition as well.
Manoj, good morning. Thank you for joining in. We'll get to the business aspects of things right now. How has demand been so far in the quarter gone by, in the current quarter actually, and what is the volume and revenue growth target that you're projecting for FY25? You had earlier projected a 13 to 15% volume growth and a 2 to 4% price growth guidance. What's the current trajectory looking like as the quarter has gone by so far?
I think it looks like that what we said and what we have planned for ourselves, we certainly should now be on track on this stuff. That's what it is. We're already into the festive mode, and I see quite an excitement around when we speak to our channel partners, when we speak to trade in the market. I mean, I see quite a positivity. Good in last couple of quarters is that now the rural demand, which is now picking up, in fact, it is ahead of the urban demand. That's where it is. So things are looking pretty bright at this point in time.
All right, things are looking pretty bright. Do you want to up your guidance that you've given to 13 to 15% volume growth with 3 to 4% price growth? Can you outdo that?
See, we're talking of the full year number. So that's where we certainly should be there. I know if thing goes well, if let's say category grows even faster. So I think these numbers should also be indexed to that.
And your margins, you were expecting at least 0.5% improvement. Do you think you can do better than that as well?
See, eventually, yes, that's a journey, and which is what we have said that say by 50 basis point year on year, we would want to increase on the bottom line, and that's what teams are working on. So across vectors, that work is on, and this is what we certainly will do. More importantly, we are not just only focusing on the bottom line. Our task is also to get the volume growths in place. So that's where we are.
What about utilizations, Manoj? Current utilization being around 40 to 45%. Has that number gone up? What is it that you're targeting in terms of peak utilization, and how much are you expecting your new plant also to contribute to your incremental revenues going forward?
So the capacities what we have built for ourselves, this certainly is ahead of times, and that's where we are at about 44%, 45% kind of utilization. The kind of volume growth we are talking of, so if we continue to deliver that stuff, so in say 3 years time, we should be about 70% plus kind of a utilization. And once we cross a threshold of say 80% or close to 80%, then would be the time we would look at for the expansion or so. So that's what is the plan.
All right. So far you have capacity on ground. Just wanted your targets on your direct reach as well, because you've increased it from a little over 1.6 lakh outlets to about 2.7 lakh outlets in June. Where does that number go by the end of this year? And what are your target market shares in both core and non-core markets?
So this year, our intent was that we should reach to 300,000 outlets directly. We started the year, at that point in time, we were at 2.5 lakh outlets. That's the target for the year. I think we will certainly surpass this number. That's the kind of work which is on. And eventually it will give us increased indirect reach as well, which perhaps will not be fair to quantify, but certainly from 1.1 million outlets, what we are today, this needle will also move up.
One final question from my end, Manoj. What is the current status of the cash or the debt that you have on your books, and how is that likely to change once this acquisition that you are planning to announce on Friday, how is that going to change your balance sheet structure as well?
See, it's not a very big acquisition, that's one. Second thing is that ours is a cash generating business, and we also have, good cash on our books. So I think this debt would not be an issue in this case.
What is the cash?
So we have in our balance sheet, if you look at, so we have enough and more cash on our books. It's close to about 200 crores. That's what is sitting there.
All right. Thank you. 200 crores of cash and roughly 250 crores that you generate every year as well. So that should hold you in good stead. Good luck with that acquisition. We'll obviously touch base once you've made an announcement to the exchanges after your board meet on August 23rd itself. Always a pleasure speaking with you. With that, let's move on. Let's talk about a special segment for profit coming in from our colleagues at Money Control Pro. The idea for profit today comes in from Anubhav Sahu.
Hi, so we are tracking Aarti Industries, wherein management commentary on supply side pressure spooked the stock and it corrected sharply post its Q1 results. Now, management has cited various global headwinds from the Red Sea crisis to dumping from China, impacting turnaround time and margins. Now, on account of that, management is getting cautious about its fiscal year 25 EBITDA guidance of 1450 to 1700 CR. That said, we see it as a tactical opportunity as the volume growth guidance of 20 to 30% in fiscal year 25 is intact, and new capacities and newer chemical value chains are expected to get unlocked in next few quarters. Secondly, share of exports has rebounded to 55.5% from 43% last year. Discretionary markets such as dyes and pigments and polymers continue to do well. Further, EBITDA margin continue to improve on account of operating leverage in spite of gross margin pressures. Now, in next 12 to 24 months, our company should start reaping the benefits of massive capex cycle underway. Our conservative estimates pencil in more than 25% earnings CAGR in the medium term. Now, taking that into consideration and reasonable valuations, the current market gyrations provide an opportunity in our view.
Ideas for profit there from Money Control Pro. Time for a short break here on Chartbusters. Up next, we'll be joined by Kailash Lalpuria, who is the Executive Director and CEO at Indocount Industries, to discuss the company's business outlook. Stay tuned. Back on the other side. Back with us here on Chartbusters. The Nifty remains around that mark of 24,700. The IT index continues to be the top contributor to the gains in today's session as well. It is the 7th straight day of gains for the Nifty IT. The index is trading at a record high as we speak, surpassing the previous record high, which was around 41,380 in today's session, now closing in on the mark of 42,000. But the one pocket that is not doing well today, though, are the defense names, and almost every other defense stock as we speak, be it Masgao Dock, be it Cochin Shipyard, Garden Reach. Masgao Dock now at the lowest point of the day, 8% lower as we speak. Hindustan Aeronautics also now down over 2%. Cochin Shipyard 4.5% lower. Remember, ICICI Securities put out a note over the weekend projecting a 77% downside in shares of Masgao Dock and a 74% downside in shares of Cochin Shipyard, and showing up in the stock price in today's session. Bharat Dynamics as well at the lowest point of the day. Is there something that is on your radar as well?
Well, I'm looking at the Nifty Bank, Hormaz. You know, once again, the Nifty Bank has seen some sell-off at the 20-day moving average levels, upwards of 50,850 thereabouts. It's mildly off those levels, but it's telling you that it's, struggling to cross that convincingly. Can this dip be bought or not is the answer that we're looking at, because for now we are, at higher levels. We're seeing some profits being skimmed off names like HDFC Bank. So the intraday chart of HDFC Bank should come up for you. It's, holding around that 50-day moving average mark on that counter, close to around 1635 thereabouts. And there you have it. Along with that, you have Kotak Bank as well, which has seen a wee bit of a sell-off from the top. And as a result of which, the Nifty, when we started the show, was close to around 24,730, has come off a good 35 points from the highs itself. No such problems for the PSU pack, though. Yesterday, the PSU banks did extremely well, and that was ahead of the Finance Minister Nirmala Sitharaman meeting the heads of the public sector banks and regional rural banks to review their performance. Now, what we learn is that the Finance Minister has asked the public sector banks to actually carry out special drives to boost deposits. That's not all. She's also asked them to implement a new MSME credit assessment model based on digital footprints and cash flows. Sapna Das joins in with the details of that one. Sapna, the message from the Finance Minister is to drive up deposits. I mean, a lot of people in the banking sector right now are a little worried about the slowing pace at which deposits are accruing.
Well, first of all, it's a bit of a change in the situation. It's a reversal of the situation. Like a few years ago, we used to listen or we used to talk about banks doing loan melas, basically to attract credit, or rather to make sure that there is credit offtake. And now they'll have to undertake special drives for deposit mobilization. So, probably the same kind of model is going to be adopted, but for a different purpose altogether. Having said that, this is an important advisory coming from the Finance Minister, probably stems after the Reserve Bank of India's indication or warning that this could translate into systemic risk. The fact that continuously the credit offtake is much higher than the deposit mobilization. The gap there, I think, is around 300 to 400 basis points, and probably the banks will have to try to do something to make that good. Of course, in terms of doing these special drives, banks will have to watch out for if there are higher interest rates that are going to be offered on deposits. That is already happening, but that will also translate into higher lending rates to an extent. Some of the banks have already done that. So there are other issues also involved. We'll have to see how this really impacts the economy, if at all, in the coming months. So that's an important advisory being given by the Finance Minister to the PSBs. Second, she has also told PSBs to expeditiously implement the new credit risk assessment model for MSME lending. This, of course, will be based on cash flows and the digital footprints and not on the balance sheets alone. Remains to be seen how that pans out. Last but not the least, she's also spoken about, banks, government, regulators and security agencies coming together to basically handle cyber risks. Now, here is something that we have to watch out. If there's something else that the government has in mind that they may be announcing at some point in time. But for now, all attention on banks in terms of how well they're able to do the deposit mobilization and what kind of special drive they are able to undertake to attract those depositors.
Sapna, thanks a lot for that update. A couple of other stocks, but before that, PSU Bank Index, of course, continuing to trade with gains of 1% higher in today's session as well. Was up yesterday and continuing to build on those gains is the PSU Bank Index, now back above the mark of 7,000, now up over 1%. But a couple of stocks that I wanted to highlight. One is Nucleus Software. That is the one that is locked in a 20% upper circuit, and that is after the company announced that it will be holding a board meeting on the 22nd, which is on Thursday, to consider a buyback of equity shares. Now, this is the third buyback that the company will be announcing after 2017 and the one that they did in 2021. So 20% upper circuit for Nucleus Software. But what on the flip side, though, is Ola Electric, and that stock made a high today, was up around 4.5% in initial trade, doubled from its IPO price, crossed that mark of 152, and now has cooled off significantly from the highs of the day. And there was also a block deal that took place in the stock, around 3 crore shares, 0.7% equity, around 470 crore rupees, the kind of block deal that took place in the stock here in Ola Electric, 2.5% lower. Take a short break here on Chartbusters. Back with more on the other side. Stay tuned.
Even as the Nifty is off its highs, no problems with the mid-cap index. The broader markets continue to do well, and right now we have Balrampur Chini, a stock that entered F&O ban yesterday, as among the top F&O gainers. So we'll keep an eye out on that. Alongside that, we have Torrent Power, Union Bank, RBL Bank, all of them hitting highs of the morning too. But let's get in a CNBC-TV18 exclusive. Earlier, we spoke with Ramdev Agarwal, who's the chairman and co-founder of Motilal Oswal Financial Services. He spoke about his views on both Zomato and Trent, saying that Trent valuations have run up ahead of growth expectations, though he remains bullish on that, as he remains bullish on Zomato, though he's began skimming his positions on that stock as well.
What kind of thing we accumulated at sub 100 level after the first correction? I think quite a bit of that we have sold at a mutual fund level, but exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus, and also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in Trent has reached a level which is very difficult to understand. But there is a momentum in the company's performance as well as in the price.
Some bit of profit booking seen in Trend today, but then that's expected after stock goes up almost 200% in a year. But with that, it's a wrap on this edition of Chartbusters from Manglam, me and the team that put this show together. Thank you so much for watching. Trading Hour comes up next.